Hi, it's Connie from Prosperity Finance. I hope you and your family are keeping well. As you can see, I'm recording this video from my deck this week. Are you working from home as well? How you feel? Well, for me, the biggest challenge so far is keep focused on my work and deliver the same level of service to clients, and at the same time look after my 5-year-old and keep her entertained, and also look after her home study. So that's been pretty challenge for me. Okay, so in today's video, I'm going to share with you the most asked question, 3 most asked questions so far since the lockdown period. So let's start it. Number 1 is, should I go with mortgage holiday directly? Well, the answer is depends, what your situation is. Mortgage holiday is really beneficial if this is your last resort. For example, if you lost your job and there's really no other ways that you can keep up with at least, interest-only payment, then yes, mortgage holiday is good. You don't want to miss any payments. The bank are really acceptable in terms of converting to mortgage holiday for 6 months. Well, the downside is this option is not a free lunch. It's not a holiday at all. In fact, more cost in the long run because you still incur interest. It's just not being charged for the next few months. So basically, they add the interest cost to your principal. So by the end of the mortgage holiday, you will end up have a higher balance, which means you either have higher repayment amount or it takes longer for you to pay off that loan. So please do not consider this option as the first option. The first option should be considering paying interest only or extending your loan term. Now, take the example, some clients, by changing principal and the interest to interest only, they can easily save over $1,000 a month. That's a big saving, enough to give them a bit of relief. So please consider interest only or extending your loan term as a first option, as opposed to taking mortgage holiday straight away. Now, the number 2 frequent asked question is, if I bought a property due for settlement in April, what should I do? Can I settle or not? Well, there are 4 challenges for settlement during the lockdown period. Number 1 is, normally you actually have to go to your solicitor office to physically sign the loan agreements. Now it's becoming impossible. So the first hurdle is if your solicitor can work virtually with you to get the loan docs signed. Well, some solicitor hasn't adapted to that new process. So you have to contact your solicitor and find out, firstly, if they are working still, and if so, how that's going to happen. Number 2 is, does the bank accept not taking original copy for settlements? Most of the main banks, they are very acceptable for to sign documents. So just give you a kind of assurance that it's fine in terms of not signed original copy from the bank perspective. Now, number 3, the moving company obviously stopped operation during the lockdown period. So you have to use your private vehicle for moving furniture. Now, if you can't do this, there will be quite a big challenge. But some vendors doesn't accept this as an excuse not to settle. So just be careful. Now, the 4th challenge, the inspection of the property can't be proceed. Yes, it can be proceed, but there's a way around it. Ask the vendor if they keep some money, for example, $10,000 in the solicitor's trust account, and proceed with the settlements. But then the inspection still carried out, but it's post-lockdown period. In case there's some issue that come out of inspection, then some remedy can be deducted from that $10,000. So that way, make the settlement happen. So there's 4 hurdles. So we saw some cases they can still proceed and some will not, and mostly are due to these 4 factors. So if for whatever the reason it can't happen, best to work with your vendor, best to work with your buyer, maybe just defer the settlements and not to charge the penalty, because there's no one's fault. It's the virus. You make the lockdown come so suddenly. So please work with your vendor and buyer and see if you can defer if possible. That will make it easy for everybody. Now, the last frequent asked question is, my income already affected, my pay has been reduced during the lockdown period. What's the point for me to review my structure already being affected, or I haven't been affected so far, quite lucky, so I don't really have to review my loan. Well, I will take a longer term approach. Now, the coronavirus is only a trigger for us to reflect what could go wrong and what could affect our income. Now, I would say it's still a good practice to review your loan from time to time. A few areas that you need to look deeper. Number 1 is if you have more than one property, it's best to split the banks. It's a better protection. And number 2 is if you haven't have a revolving facility or offset facility, then it's never too late to have one. So that helps you to cover the rainy days for emergency funds. Now, lastly, if you have a spouse or partner and both of your income are credited to the same bank, then it's the best time to think about splitting, because in a crisis time like this, bank would only have a capacity to consider their own customer. If you want to borrow more money or do whatever you need in terms of your finances, it can be quite challenging if your bank say no. So it's better, split the banks, don't put everything in one basket. So if both of your income credit to the same bank, make one of your income to a different bank, so that you at least have a 2 option at the crisis time. So that's the 3 most asked questions during the lockdown period, and I'd like to share with you. If you find this video useful, please feel free to share with your family, friends, and you can also subscribe our YouTube channel, because every week we have a great content to share with you. Thank you for watching. You take care. We see you next week. Bye for now.